Hello everyone. Hello everyone. Hopefully you can hear me loud and clear. Let me know whether you are facing any issues today. Okay. So it's a beginners webinar today. Just to clarify for everyone that this is a beginners. Is regarding RSI and how you can use it. So we're gonna go through the basics of RSI, different what it is, how it works, what it indicates, different settings as well. So feel free as usual to ask me anything you want. Stick it on the question box and I will be here to reply. Okay. In the meantime, I have uploaded as well the handout. So it's basically the slides in a PDF format. Good afternoon, Barak. Please, I will really appreciate the feedback regarding the audio because I can see that it's a bit weak. So I will try to correct it or something if you're struggling with it. So we're good to go as soon as I have a feedback. Let me go through the disclaimer warning as usual. Quick reminder that this is recorded, so you will receive the recording as soon as we are done with the session. So, disclaimer. This material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading. And if necessary, seek independent advice. Please read the full risk disclosure in our website. So, we're good to go. Let me check for any feedback. No feedback? Okay, hopefully you can hear me. There is no sound. Oh, wait a minute. Why is that? I can see that it's capturing, so let me reply. Guys, are you all facing an audio issue? Guys, please, I need to hear from you that you can hear me loud and clear and that you are not facing any audio issues. So this is the email address, webinars@edgefm.com. Our email address, you can ask anything you want, right? I really need that feedback from you. Anyone? Any feedback regarding the audio? No? Any feedback regarding the audio? Anyone? Any feedback? Okay, guys, can you hear me or not? No one can hear me? No one. Okay. Okay, give me a second to fix it. Yes, I can't hear you. Yes, you can. Okay, okay. Uh, Guys, can you hear me now? Can you hear me now? Yes, a webinar started facing some issues with the audio. Uh, so. Oh, can you hear me now? Guys, can you hear me now? Can you hear me now? No. Okay, I cannot get a thumbs up, so I guess it's... Welcome back, I should say. Is there still no audio? Oh, perfect. Thank you, Rodero. Thank you, Mario. Finally. I really don't know what changed. I just keep enabling and log in and log out all the time. Oh my God, it was quite stressful. I'm really, really, really sorry. I don't know. Another program was capturing my audio. This looks like the case I actually. So I think now we are good. We're good to go. I'm not gonna go through again from the disclaimer warning and everything, guys. I think I'm gonna go just straight on the I'm gonna just go straight on the webinar because I wasted 20 minutes of your life already. Okay, so let's go straight to the RSI, what it is and what we're gonna see today. So, okay, perfect. So, as I was saying, today is a session for beginners because it's RSI, a very popular indicator, well-known indicator, and actually something that is widely used. So today we're gonna see how you can read it, what's the benefits and the limitations that the RSI provides, and obviously different settings on how you can settings that you can use actually in order to help you to fit better your trading journal and your trading strategy. So RSI stands for relative strength index, right? So what it is basically is an indicator, a very straightforward one. I'm going to show you how it looks like as well, that provides not only momentum, right, but also how strong the momentum is. So why momentum is so useful for an asset, for an asset direction, for an asset trend? It's very useful, guys. Why? Because by identifying whether the momentum is weak or strong, that indicates that our trend will last for longer, or our trend is about to run out of steam, right? So that's the good thing about RSI, that it's helping us to analyze trends, right? It helps us analyze trends. Okay. Oh my God, that was stressful. Hopefully you can still hear me. So yeah, that's the that's why is other than you can name it as a momentum indicator. You can name it also as oscillator because it's a trend following indicator. right? And you might also be aware and be familiar with this name that I put on my slide, the name of Welles Wilder, because it's the one of the most famous mathematicians, economists, analysts, and etc., and the developer of RSI, ATR, ADX, parabolic SAR. So these are some of the most famous, absolutely famous indicators, and widely known because of their simplicity, right? Guys, I don't know whether you hear me last time, obviously not, but there is a handout that you can download as well. All my slides are in the handout section, and they are in this handout section, so feel free to download it. Okay, so don't forget that. So, and this is recorded as well, so we're good to go. So that's the main thing with RSI. Relative strength index, otherwise RSI, an oscillator that is designed to measure a stock's momentum, a currency's momentum. It can be applied to every single asset, okay, and can show you the speed of the trend and the speed of the price and the size of the price changes. Where do we download the ebook? In the GoToWebinar, there is a section called handouts. If you click on it, you can find my my PDF over there, dear Leo, and download it. So basically, it's the slides in a PDF version. Okay, so it's so widely used in every single asset. It can be applicable to any asset class, any time frame, because it's very simple. That's the key. It has only one parameter, which is the time. Okay, it's a single line. I'm gonna show you right now how it looks like. But the thing about it is that it helps you identify, as I said earlier, the momentum, that trend. So momentum, by saying momentum, I'm obviously referring to the strength of the trend, that trend as well, and also signals a change or a potential change in the direction of the trend. So it gives an alert whether the uptrend is about to turn to stop and pull back, or whether a downtrend is about to rebound. So because simply it identifies overbought and oversold conditions. By default, you can find the RSI in a 14 period time frame. What that's supposed to mean? It means that it takes into consideration the last 14 candles. So if you have applied to a 14 days to a daily chart, oops, let me get back to a daily chart, the calculation of the RSI will be based on the last 14 days. Okay, if you applied it in 1 hour chart, it will take into consideration the last 14 hours, and so on and so forth. Yes, George, don't worry about it. It is recorded. I have already checked it. So you will receive it in your inbox once we are done. Always check your spam or junk folder, because sometimes, unfortunately, it goes to the spam or junk folders. But as soon as we're done, within 24 hours, you're going to get the video. Okay, don't worry about it. So so this is the formula, okay? but you don't need to worry about it because the MT4 or MT5 or any other platform or HFM app, if you're using our app, is doing the calculation for you. So it's giving you just the indicator line. So this is how it looks like. You can see it on the bottom. Okay, so it looks like a line which is bouncing between within a range. So this is what we're going to explain right now, what this range is for. Basically, this range is separated into three parts, right? Main, the main one, the top and the bottom. And you can see, if you can see, there are some ranges. So basically, RSI is as I said, as an oscillator, is moving within a particular range. So the scale of RSI is from 0 to 100. Okay, so this is the overall range, but this separation into three parts, there is a reason basically for this separation, because if the RSI moves above 70, which is the top over here, the top range, this indicates that we are in an overbought condition. Okay, this indicates that we are in an overbought condition, that our asset has been overbought. So that is calling for a correction. Whether this is a long-term correction or a short-term correction, no one knows, but this is an alert that you need to be careful, because the asset might need a bit of a correction, a bit of a pullback. Okay, if the RSI falls below 30, that indicates an oversold condition. So oversold, it means that the sellers were in a full control, and there are no more sellers jumping in, because it's fully it's all has been oversold. This is it. So this indicates that bulls might find the opportunity to jump in, because the asset has been oversold. When an asset is oversold, that means that the price has fallen significantly. Okay, and you know that if an asset turns too cheap, let's say cheap, that attracts bulls, right? That's why if we saw RSI below 30, that could indicate that in the near future we might see bulls entering the market. So we might see a rebound on the price of the price. In the meantime, it's not only these two are not the only signals that we're getting. We can get signals even if RSI is bouncing between 30 to 70, right? So you need to draw a line, a vertical line at 50 level, because 50 is the neutral zone. Okay, is a neutral zone, it's the mid of the range, right? So the mid of the range is quite useful, because it can be used as an entry moment, because as soon as we see RSI moving above 50, then this is used by buyers as an entry level. So it's if we saw RSI above 50, that means more buyers in the market. So it shows a potential entry point. If RSI falls below 50 and it points, also the slope matters. If it slopes further down, that attracts more sellers in the market, because this might be used as an entry point for a short position. So you see, there are multiple entry or exit levels by using RSI. Okay, we're gonna see some examples as well. Let's move on. So as a momentum indicator, right, it takes into consideration, as I said, the previous 14 days or 14 hours, depending on which time frame we are. So as I'm saying over here, the RSI is the average daily change for those days when the market rose, divided by the average days daily changes for those days when the market fall. So it gives us the average. So if the average loss is more than the average gain, the RSI will fall. If the average loss is less than average gains, then the RSI will rise. This is why if the RSI rise, this is an indication that buyers are entering in the market, and when the RSI falls, this is an indication that sellers are entering the market. Okay, so here let's see a bit of this example as well. So you see, RSI, it topped at 70, it didn't move above 70, it topped at 70, but it started pointing lower and started falling as well. You see, started falling, steady a bit, then it kept falling. So it crossed 50 over here. But it's not only that. Can you see that we are getting from RSI lower highs? Can you see that, guys? And we're getting lower highs from the price action as well. So this is a signal that we have a downtrend, right? Okay, the very first signal came as soon as we had that evening star formation, but there wasn't enough confirmation for it. The confirmation came with this candle and the fact that we had a second lower low from the RSI, and not only that, we have also a cross below 50. So that could have been a nice entry point to the downside for the gold over here, for the gold. So combine RSI signals with the price. So check your price, check your RSI in order to be confident about your decision. So this is the best combination. If you combine what this momentum indicator is showing you, what the RSI is showing you, with price action, if you closely check price action and whether price is going up or down, or if you have spotted any candlestick patterns, etc. If you combine these two, this will give you confidence about your decision and will increase your probabilities of being right? So relating the result from this comparison to price action can give you an idea of how the asset may perform. Remember that RSI it works better if it's used in conjunction with the price action, or one more indicator if you prefer, just to help you make better informed trading decisions. So over here it has been combined with parabolic SAR as well, right? I have Bollingers as well, but I'm using also lines. I'm connecting with trend lines, the highs of the price or the bottoms of the price. So look at that, right? I had the latest high over here, then the price started moving sideways. My RSI was close to 50. There was the slope was like pointing on the right hand side, so there was no slope. There was no slope. There wasn't a slope either pointing to the upside like here, or a slope pointing to the downside right here. There was no slope. But okay, my Euro New Zealand over here came down and continue moving sideways. However, it remained above the mid of the Bollinger Band, right? However, I noticed that I keep had lower highs, and the parabolic SAR were at the top of the price action. If parabolic SAR are at the top of the price action, this is an indication that sellers are trying to gain the control. So this is a bearish signal. So the very first indicator that showed me that we might see a decline, it was a parabolic SAR, but I couldn't be sure. I couldn't enter the market because there weren't enough evidence, right? Parabolic SAR were indeed bearish, but still the asset was holding above the mid of the Bollinger, and RSI was flat, was at 50. There was no indication. But as soon as I saw this candle, a massive candle, a strong bearish candle, crossing and closing below the mid of the Bollinger, and not only the mid of the Bollinger, but also my second moving average, the 50-day moving average. Okay, so I had more indications. I had Bollinger, parabolic SAR indicating a bearish signal. I had this candle, bearish, strong bearish candle, crossing and breaking the 20 period moving average and the 50-day period moving average, but also my RSI dropped below 50 over here, and not only dropped below 50, it pointed further to the downside. It pointed down. So that was a nice entry level. Either that one when it crossed the 20-day moving average, or this one when it crossed the 50-day moving average. Nice entry level. And regarding the targets, it's up to you. You can either use Bollingers, so the bottom of the Bollinger to be your first target. You can use Fibonacci like I did over here, and so on and so forth. That's all previous lows. So the top over here or the bottom over here could have been alternatively other target levels, and so on and so forth. So let's move on. Okay, so as I mentioned earlier, it's not only the 70 and the 30, the overbought territory and the oversold territory that matter, but also whether it's above or below 50. So ideally, in order to help yourself, it's good to have a line at 50 like I draw over here. Okay, unfortunately this line is not by default. I added it on. Okay, so so over here I put some scenarios just to help you understand. So understand basically that why 50 could be used as entry level. So let's take scenario number 1. So other than the fact that Aussie was moving to the downside for 3 days in a row, okay, it was indeed moving for 3 days in a row to the downside. However, RSI was above 50, so it wasn't a nice signal or it wasn't a sign that indeed we have a downtrend and we can jump into the market, and so there wasn't enough info in order to be confident about it. But the third day, as you can see, RSI crossed below 50, right? So that was something that triggered the attention that indeed we might have seen the beginning of a downtrend. However, the next day, as you can see over here, right here, the next day confirmation came because we had another bearish candle crossing below the 10 and the 20-day moving average. And look at RSI over here. Look, the slope is so sharp and steep to the downside. That's an indication that sellers are in control and the momentum is increasingly bearish. We have a strong bearish momentum, and that was an indication that we have a new trend to the downside. Now, let's see the vice versa scenario, which stands for the second scenario over here. So the asset rebounded over here away from the bottom of the Bollingers. However, RSI over here, it was below 50. Okay, so obviously you can still use this rebound away from the overbought territory as an entry level. But if you missed that, another confirmation that there is still momentum, that there is still time for you to enter the market long, is when the RSI cross above 50. So you see there are two possible entry levels over here. One possible entry level is the rebound of RSI over here away from the oversold territory, in combination though with another indicator, right? So in this case, our indicator is the price action, because we can see that the price rebounded away from the Bollingers, right? And it recovered more than 50%. The third day recovered more than 50% of the decline that we saw over here. So you need to combine it. You need to check your price action, whether it gives you the same signals as RSI before taking any decision. But if you missed entering at the bottom of the trend, don't worry about it. As you can see, if the RSI keeps rising and keeps pointing to the upside and cross above 50, and if it cross above 50 keeps point to the upside, that means that there is still a further move to the upside. So that's why you need to be careful regarding the slope of the RSI. Make sure that it points for further rally and is not flat. If it's flat, that means that there is no strength. It needs to be either pointing to the upside like here, or to the downside right here, and that will indicate that there is further steam to the downside, further room to the downside. Obviously, you see how well it goes with the price action analysis. So cross below 50, sharp, steep, so sharp slope pointing to the downside. That is not only that, consecutive bearish candle gave the confirmation that there is still time to jump into the market for a short position. So consecutive bearish candle. So always guys, combine RSI with another indicator, or by closely analyze your price action and your candlesticks. Candlesticks can give us a lot of information, a lot, okay? That's why there are a lot of traders that they are solely price action traders. Samuel, don't worry about it. This is recorded, so you're gonna receive it on your email. Just check. You're gonna receive the recording in your email, either and check always the spam or junk folder. So as I said, Breen, how you to determine take profit when using RSI. You can exit a level. Okay, you can exit your entry when you see your RSI um, changing direction. So let's assume that you took that entry, you saw the consecutive bearish candles, you saw that RSI was moving cross below 50 and pointed further to the downside, and you benefit all this decline, but you were trying to find an exit level, right? An exit level could be the rebound away from oversold territory. Can you see that? It entered oversold, it's steady, and then it crossed above it. So that would be a nice exit level. But alternatively, you can use also your price action. Remember, okay? Don't be greedy. So, or like in this case, if you had a profit at the previous bottom, that was also an alternative. But yes, the exit levels are the change of the RSI. So we are in a downtrend. So a move above the oversold territory, above 30, would have been a nice exit level. If you are on an uptrend like this one, for example, a pullback, if RSI starts pointing down, that might be a nice exit level. Not necessarily to cross 50, but as soon as it has a sharp or at least if you see it pointing down, that might be a good time to exit the market, but it might be too early. So that's why I'm saying always combine it with another indicator, because in this case, you see, in this case, the edge of the Bollingers will have been great. So let's focus a bit on the overbought conditions, because the overbought conditions are not necessarily always exit levels. As I said earlier to Breen when he asked about take profit conditions, when to take profit. So remember, I told you to take the exit as soon as you see the asset turning outside, above. Where is it? Here. Moving above the oversold condition, crossing above 30. I didn't told you to take a profit as soon as it enters the oversold condition. There is a reason for that. The reason is that even in the extreme conditions, even if RSI is in the extreme conditions such as overbought or oversold, there might be still a strength, further room to keep moving on the same direction. Okay, so look at this situation. It's a long-term uptrend. The asset entered overbought condition here, but look how big this trend is. So the asset was here, entered the overbought condition, it kept moving higher at 80 level, then did a small correction, then entered 70 again, keep rising until it crossed the below 70 and breach 50. So that's the exact reason why I said, dear Brain, to combine it with another indicator, or to check your candles, because RSI might lead you to an early exit. Okay, so that, look at that. If I consider taking profit here at the moment I saw RSI falling below 70, I wouldn't benefit all this rally over here. So that was it fall below 70 because there was the need of just a small correction, just a correction before another attempt to the upside. Okay, that was the only reason. So you see over here, the moving averages work perfectly in order to help me spot the right time to exit. Okay, so you see that it tested the 10-day moving average, but rebounded. It didn't manage to cross below it. It didn't manage to close below my moving average. Okay, you see, it continued to the up until it managed to cross below my moving average. So this candle over here, in combination with the fact that it crossed below 70, would have been a nice exit level. Okay, clear? Clear? So always combine it with another indicator. So these are some reasons why it needs to be combined with other indicators. If there is a large price movement because of news, because of something happening or whatever, RSI could create some false alarms, right? Like all the indicators. If there is something breaking news, it might provide some false alarms. That's why I'm saying always compare it with the reaction of your price action. Compare it with another indicator just to be sure, right? Always. I also, settings are quite important. Some traders, and you might tried it in the past as well, try to change the settings in order to avoid such as false signals. But it's okay changing the settings, obviously, because if you apply RSI in 1 hour chart or 30-minute chart, you need to adjust it in order to give you nice, accurate signals. But you need to be careful. You need to test the settings, because if you change the settings and use more extreme RSI values, that might give you delay signals. Okay, so be careful. You need to always test your settings. Always test your settings. By default, RSI is a 14 period, but if you're using it in shorter time frames, or if you see that it doesn't give you, you need to scan, right? You apply RSI, you go backwards in your charts and check that did it give me nice signals. If it does, keep the default settings. If it doesn't, amend it. Some you might try to you might try 7 period 1, 10 period 1 to amend RSI in order to make sure that it works good for your asset and your time frame. Okay, so this is an example of an RSI for Swiss 14 period 1. Okay, with the default settings, basically 30 to 70. But, sorry. But as you can see over here, let me just find it, sorry. So actually for the 4-hour chart in Swiss, it gave us the default settings worked perfectly, but this is the default settings, right? But by detecting the RSI to 7 period 1, can you see 7 period 1? We noticed that it gave us better signals. Look at that. It topped over here, so RSI was at the top of 70, and it sharply pointed lower, so that was due to this massive sell-off, right? So it continued a bit sideways though, and that explained this rebound over here. Sorry, this steady sideways movement over here. But then it started falling again. And this is when RSI fall below 50. So that was a nice entry level with RSI below 50. And if you notice, RSI started pointing higher, and it gave a nice signal to exit the trade over here. So when the price was here, so you see the $74 Swiss 4-hour chart, the 7 period RSI looked to provided better signals. But in this case, both the default was quite nice as well. You see, bottom, and here it exit the 30 barrier. So when the price was somewhere here, so they both work perfectly. Just the 7-1 gave earlier signals than the 14-1, but be quite careful, because in this case a decline like this one is not necessarily confirmation, right? It needs to be in combination with the price action. Because look at that, for example, look at that. Above 30, above 30, but it didn't cross above 50. Price rose, but then sharply down again. So that called for an exit level earlier than it should. Okay, look at that here, and look what happened in the default settings. Sorry. So in the default settings, look at that. Slightly, no slope. The slope wasn't sharp. It was a bit neutral, weak. So that wasn't enough confirmation to take profit or enter short or long or something. So, and then fall again. Okay, so be very careful with the settings. Some might give you very fast signals but not so accurate ones. Some might give you very delayed signals, such as the 20 period one. This gave me such a delay signals that obviously is not good to use it for this 4-hour chart dollar Swiss. I have included several examples of different settings for you to study on, okay? But always what you need to do, as I showed you earlier, you need to go back when you're trying different settings, okay? You need to go back and see, okay, here it fall. Did RSI give me correct signal? No, it didn't, because the market was moving sideways while RSI was pointing for a fall. So no, I'm not going to use 7 period for Aussie dollar, for example. You need to go back, or here, Okay, it rebounded. Okay, here was okay, but yeah, fast, that was okay, that wasn't that bad. Here it fall, indeed it fall, but what happened over here? It crossed above 50, even though there was further decline to the downside. So that was too early to exit. So be very careful. Check different settings and stick to the one that you see that it gave you the most accurate signals. And obviously, if you find the appropriate settings, stick on it. Don't change it again, okay? Also, some traders use 10 because it presents two trading weeks. So if you are in a daily chart, you might consider checking the using 10 period 1. Test it, see whether it gives you accurate signals, and go for it. Some other traders use 12 for Forex since it's traded over 5 days a week. Okay. So yeah, different settings that you can use, but always guys, make sure that it makes sense to you and it gives you the most accurate results, right? So change if you want the default. If you feel that it doesn't give you nice signals, check the ones that I provided: 7, 10, 12, 20. Investigate it in depth to check which one is the most appropriate setting for your asset. Some other alternative ones, but in a long-term period, is the 7, 35, or even 65. But this is for a long term, and it's quite extreme, to be honest. It might give a very delay signal. So there is no correct figure, right? There is no correct settings. The default is the 14, and I use it several times, the 14 period 1. But in some cases, if you are in 1 hour chart or in an asset that is very volatile, the 14 might provide you delay signal. So there is no correct right or wrong figure. Test, and find the one that makes sense to you and your trading strategy, and it fits better your trading strategy. So something last but not least is divergence. If you notice that your indicator, your RSI, is signaling the exact opposite scenario with the price, that might be an indication of divergence. If so this is an indication of divergence. It's something that you cannot spot. You cannot spot easy, but if you spot it, you need to put a note and monitor it, because it might be an early, ahead of time indication for a possible trend reversal. It's just an alert. It's not a signal to enter. Okay, be careful. It's not a signal to enter. It's just an alert that put a note or something. Keep monitoring it the next few hours or few days, depends on which time frame you are, in order to see whether indeed you have a possible trend reversal. I have put some examples over here in a daily chart. This is Kiwi. This is a bullish divergence, because even though the price was falling, I keep having lower lows. RSI was started providing higher lows. So you see here, I have one low, another low, I connected it, and then at the same exact time period, I connected the lows of the RSI, and they were pointing higher. So you need to check the same period in which you spotted lower lows to your price and whether you are getting higher lows with your RSI. So that was an ahead of time signal that we might see potentially an uptrend. So you need to follow some negative steps for divergence. Check the price action. Does it make lower lows? If yes, connect them. Check the indicator for the exact same period. Does it make higher lows? If yes, connect them. Okay, then check the trend. Okay, check the trend. Is it like starting point moving higher or something or nothing? If nothing, just don't do anything. Just keep monitoring. A possible entry could be taken if and only if you have enough evidence and a breakout of significant resistance levels. So in this case, right, because okay, this is a daily chart, that's why that took days and actually weeks to to be proved. But indeed, the breakout of this resistance over here, this 2 months resistance broken here and confirm the uptrend. This is a bearish divergence. So it's the vice versa. If we're getting higher highs, sorry, if we're getting higher lows and higher highs from the price action, but lower lows or lower highs from the indicator, we need to keep our eyes open to check whether the price will revert. It did. The reversal over here came somewhere here when the asset crossed below 20-day moving average. So at that point, RSI was still close to 70, so that wasn't enough. Confirmation came here when it crossed below the 50-day moving average and RSI crossed 50. So that was a nice entry level. Even if you missed that, you see, there was further indication for another entry over here. Consecutive, it moves sideways and then it finally moved down and broke the previous support and RSI was below 50. So guys, as a quick recap, RSI is an oscillator, a momentum indicator, sorry for that, let me bring my recap back. That shows that you can help you identify the trend, the momentum of the trend, any overbought or oversold conditions, and can give you nice entry and exit levels. It can be, it needs to, it must be combined with another indicator for further clues, right? Be very, very careful when you're changing the settings or you are expanding the overbought or oversold zone. Make sure that you go backwards and check the historical data in order to make sure that indeed when you change the settings, these settings fit and your asset and your time frame, they are giving you appropriate signals. If you spot a divergence, put a note and keep monitoring the asset until you have enough clues that indeed there is a new trend. And that's pretty much it. It's a very powerful tool. If the divergence, if you notice it on time and you keep monitoring and be patient enough to make sure that you entered at an appropriate level and not earlier. This is the thing with divergence. When you spot divergence, you should not take an entry on spot. You should need to wait in order to have further signals that the new trend has started. Either with price action, by checking your candles, consecutive bearish candles or consecutive bullish candles, or by a combination of your price action when they break strong support or resistance levels, and so on and so forth. Okay, so that was today's session. Hopefully you enjoy it. If there are no questions, I'm gonna call it a day. There is one. Do you maintain the same RSI setting in different time frames? Wait. No, no, it's the answer. So if you are you're trading, for example, you check RSI, you're checking euro dollar in 1 hour chart, and you find out that for 1 hour chart RSI with 7 period it works quite good, stick on it. But RSI with period 7 it doesn't mean that it will work perfectly for a daily euro dollar. So different time frame, then it might requires different settings. It might not. Always check. Okay. So guys, I'm gonna call it a date. Hopefully you enjoyed. You're gonna receive the recording in your inbox. Don't forget to download the handout. Anything you need, we're here to help, either with the online chat on the website, either an email at webinars@hfm.com, or social media. If you send us a messenger, Instagram inbox, LinkedIn, etc., the support team tries to reply as soon as possible. So thank you very much. Have a great day ahead, and see you again tomorrow with a price action masterclass.